Imagine having the power to unlock the secrets to building substantial wealth in 2025. We're talking about real, tangible growth, setting yourself up for a secure and prosperous future. What if you could achieve this by using strategies the pros are actively using right now, strategies that are tried, tested, and proven to deliver results? The financial landscape is shifting at an unprecedented pace, and what worked even last year might simply not cut it anymore. The market demands adaptability and fresh perspectives. So, stay tuned because we're about to reveal 12 cutting-edge investing strategies, each carefully selected to maximize your potential returns. These strategies could very well transform your financial future, setting you on a path towards lasting wealth and security. Welcome to Mindful Mentors 12. Let's dive right in and explore these game-changing approaches. Whether you're just starting out on your investment journey or already managing a substantial six-figure portfolio, these tips will empower you to invest smarter, make informed decisions, and ultimately achieve your financial goals. With AI rapidly revolutionizing markets and reshaping the investment landscape, interest rates constantly shifting in response to global events, and the green energy sector booming with unprecedented opportunities, the old, traditional strategies simply won't cut it in this dynamic environment. These 12 strategies combine proven, time-tested tactics that have consistently delivered results with the most exciting emerging trends that are poised to shape the future of finance. It's all about being proactive, anticipating market movements, and strategically positioning yourself for success, not just reacting to events as they unfold. So, let's get started on this exciting journey towards a brighter financial future. Alright, let's dive right in and kick things off with what is arguably the biggest trend reshaping our world today: artificial intelligence. It's not just a buzzword, it's a fundamental shift in how we live and work. So, strategy number one is to invest directly in AI and, crucially, the semiconductors that are powering this incredible technology, the very brains of the operation. When you think of AI powerhouses, think NVIDIA, and don't forget TSMC, the Taiwan Semiconductor Manufacturing Company, which is truly the backbone of this technological revolution. They are the unsung heroes. The demand for processing power is absolutely exploding across every sector, and these two companies, NVIDIA and TSMC, are right at the very center of it all, leading the charge. Now, if you're looking for diversification, you might want to consider ETFs, or exchange-traded funds. Take, for example, the Global XAI and Technology ETF, ticker symbol AIQ. This ETF gives you broad exposure to a diverse basket of companies deeply involved in the AI space. Remember, the AI revolution is not a flash in the pan, it's a long-term technological and societal shift, and it's certainly not just a 2025 story. We're talking about decades of potential growth. So, by strategically investing in the semiconductor industry and the leading AI firms themselves, you are proactively positioning your investment portfolio for significant future growth potential. But always remember, the tech sector, especially AI, can be quite volatile. And that's where ETFs can really help, by spreading and mitigating the risk. Always do your own thorough research and make sure you truly understand your own personal risk tolerance before investing. Ultimately, this is about making smart, informed decisions to gain exposure to what is arguably one of the most transformative technologies of our time, and perhaps of all time. So don't just sit back and watch from the sidelines. Get informed, get involved, and position yourself for the future. Strategy 2 is all about simplicity. Use robo-advisors to automate your investing. Platforms like Wealthfront or Betterment build and manage a diversified portfolio for you, based on your goals and risk tolerance. They're low cost, handle rebalancing, and even offer tax loss harvesting. It's a set-it-and-forget-it approach, perfect for busy people or beginners. Over time, the savings on fees and the power of compounding can add up significantly. Robo-advisors democratize smart investing, letting you build wealth without being a market expert. For 2025, let technology do the heavy lifting. For the more active investor, strategy 3 is trading micro-trends with algorithms. Use AI-driven platforms to spot short-term patterns, like news spikes or social sentiment shifts, and act fast. Tools like TradeStation let you automate trades, removing emotion and hesitation. This approach is higher risk and requires learning, but the potential for quick gains is real. Always start small and use stop losses to protect yourself. Algorithmic trading is the cutting edge of active investing. If you're tech-savvy and risk-tolerant, this could be your edge in 2025. Strategy 4 is to focus on ESG funds. investments that prioritize environmental, social, and governance factors. Companies with strong ESG practices are often more resilient and innovative, making them attractive long-term bets. ESG investing isn't just about feeling good, it's about better risk management and potential outperformance. Use ETFs like iShares ESG Aware, MSCI USA ETF, ESGU, to align your investments with your values. These funds filter out controversial industries and tilt toward companies making a positive impact. You can do well by doing good. ESG is a smart way to future-proof your portfolio. Building on ESG principles, our fifth strategic move is to bet on the explosive growth potential of green technology. This sector is poised for significant expansion, presenting a compelling opportunity for forward-thinking investors. The global shift towards sustainability isn't just a trend, it's a fundamental restructuring of our economy. This transition is creating massive investment opportunities across various sectors. These opportunities are particularly evident in renewables like wind and solar, advanced energy storage solutions, and the rapidly expanding market for electric vehicles. These areas are attracting significant capital and innovation. You have the option to pick individual stocks, perhaps companies like First Solar, a leader in solar panel technology, or consider Rivian, a company making waves in the electric vehicle market with its innovative trucks and SUVs. However, for most investors, clean energy ETFs offer a more practical and diversified approach. A prime example is the iShares Global Clean Energy ETF, ICLN, which provides diversified exposure to a wide range of companies in the clean energy sector. This sector is still in the early stages of a major transformation with significant growth potential ahead. We're seeing trillions of dollars being invested worldwide to support this transition, fueling innovation and expansion. And as climate goals become more stringent and pressing, green tech is undoubtedly set for continued and accelerated growth in the years to come. Remember to spread your risk across the entire sector, rather than concentrating your investments in just one or two individual companies. Looking ahead to 2025, green tech is poised to be a powerful engine for growth and innovation in the global economy. Make a strategic decision to invest in the future of energy and capitalize on the opportunities within the green technology revolution. Strategy 6 is investing in carbon credit markets, a unique way to profit from the global push to reduce emissions. Carbon credits are permits to emit CO2, and as governments lower emission caps, these credits become more valuable. The CraneShares Global Carbon ETF, KRBN, lets you invest directly in carbon credit futures. This market is growing fast, especially in Europe and California. It's a sophisticated, non-traditional asset that diversifies your portfolio. You're betting that the cost of polluting will keep rising. It's a direct play on climate policy. For 2025, consider adding carbon credits for a forward-thinking edge. Strategy 7 is timeless. Build a dividend portfolio for steady income. Dividend stocks pay you to own them, and reinvesting those payments accelerates your wealth through compounding. Focus on companies with a history of growing dividends. Dividend aristocrats like Coca-Cola or Johnson & Johnson. Avoid chasing high yields. Look for sustainable payouts and growth. Dividend ETFs like SCHD or VIG offer instant diversification. In uncertain times, reliable income is a powerful anchor. Dividends are a core principle of lasting financial independence. Strategy 8 is to tap into emerging markets for higher growth potential. These economies are expanding rapidly, with rising middle classes and huge demand for goods and services. The risks are higher. Political instability, currency swings, but so are the rewards. Diversification is key. Use broad emerging market ETFs or country-specific funds like iShares MSCI India ETF, INDA. India, for example, has strong fundamentals and a booming tech sector. Emerging markets can supercharge your portfolio's long-term growth. Don't put all your eggs in one basket. Spread your bets. Look beyond your home market for new opportunities. Strategy 9 is to invest in REIT's Real Estate Investment Trust for real estate exposure without the headaches. REITs own income-producing properties and pay out most of their profits as dividends. You can invest in everything from apartments to data centers, all through the stock market. As interest rates stabilize, REITs could rebound, offering both income and growth. Popular options include Realty Income, O, or diversified REIT ETFs. REITs add income, inflation protection, and diversification to your portfolio. Real estate made simple for 2025. Strategy 10 is to learn the basics of options trading, specifically selling covered calls. Own 100 shares of a stock, sell a call option, and collect the premium for extra income. If the stock stays below the strike price, you keep both the shares and the premium. If it rises above, you sell at the strike price. Still a profit, but you cap your upside. Covered calls are a conservative way to boost returns on stocks you already own. Platforms like Robinhood make this easy to try. Start small, educate yourself, and use options for income, not speculation. It's a smart tool for 2025 investors. Strategy 11 is to allocate a slice of your portfolio to biotech for explosive growth potential. Biotech is driven by innovation, new drugs and therapies and medical breakthroughs. It's high risk, high reward, so focus on established firms like Amgen or Vertex, not speculative single drug startups. Biotech ETFs like iShares Biotechnology ETF, IBB, offer diversified exposure. The sector benefits from an aging population and advances in gene editing and personalized medicine. Biotech remains one of the most exciting long-term growth stories. For 2025, don't overlook this sector's potential. Strategy 12 is to explore blockchain stocks, the infrastructure behind crypto, but with broader applications. Blockchain enables secure, transparent transactions for everything from supply chains to finance. Invest in companies building this tech, like Coinbase or IBM, or use blockchain ETFs for diversification. This is about betting on the technology, not just the coins. Blockchain could transform entire industries, much like the internet did. Do your research and look for real-world adoption. The future is decentralized. Get in early. There you have it. 12 strategies to build wealth in 2025, from AI and green tech to dividends and blockchain. Mix aggressive growth with stable income to build a resilient portfolio. Find the strategies that fit your goals and risk tolerance, and always do your own research. If you found this valuable, share and subscribe to Mindful Mentors 12 for more tips. Which strategy are you most excited to try? Comment below. I read everyone. Thanks for watching, and here's to your wealth in 2025.